Hello, it's Robert Miner with Dynamic Traders Group with some trade strategies for the week beginning October 5th, 2020. This is a brief video that we do for our Twitter and YouTube followers and our Traders News members on our website. It's very brief. It highlights one or two markets that have a potential trade setup next week, and we identify what the setup is and then how you develop a specific trade strategy. It's very brief compared to what we give to our regular DT report subscribers, but it gives you some useful information and, more importantly, some education that you can use for any market in any time frame. So even if you don't trade the market that we talk about here, is that you can apply what you learn to other markets. So we're going to take a look at just one market this week, but I can tell you there's at least four markets that are in almost the same setup, and you can use about the same strategy that we're going to talk about in detail today. So listen up, like I hope you listened up last week with the crude and the euro examples, because they set you up for the probable, in the case of last week, relatively short-term trends coming up that occurred last week for the euro and for crude. There's higher time frame trend reversals that are probably going to happen next week in both of those, but we're going to go to another market this week. Let's go to gold. Now keep in mind, we're traders, not forecasters. If you want to learn how to forecast the future and the markets, if that's what you think trading is about, you're in the wrong place. There's plenty of people that'll take your money to give you their forecast for the future. That's not what we do. Is we trade and we teach you practical trade strategies right up to date every day with current data, not looking at historic examples, looking at today. What do we do, and what is the specific conditions in the days ahead to make a decision? So let's take a look at one of our favorites, the gold market. I'm also going to tell you a couple other markets that are in almost the same position as the gold market, that you can use the same strategy we're going to talk about today in other markets. Okay, let's get started. So this is gold weekly data. Of course, we always look at charts, and then we look at just 3 or 4 key technical pieces of information to help us decide on the trend or potential reversal of a market. So we've looked at the gold market, and probably every couple of weeks we take a look at it. And this is, again, weekly data. And for the past few weeks, I've been anticipating that we would make another new low. I know there's a lot of people that thought we were making this compressed triangle correction, then we're going to pop out of it to the upside. But from our dynamic trading perspective, is that we anticipated that no, we had another leg down to a new low below what I got labeled a wave A low. This is an Elliott wave counts. We're probably making a wave 4, and it's probably an ABC. Notice I say probably because, again, we're not speculating on the future. We're identifying specific conditions to where we can make a trading decision with acceptable capital exposure. So again, let's look at a couple of pieces of data here. Then we'll go and look at daily data for specific conditions for a trade setup. So again, weekly data. Key here is that the weekly momentums actually made a bull reversal back here about 3 weeks ago, but because of the price and time and pattern position and daily momentum cycles with price cycles, is that we identified that a weekly low is probably not complete. Well, now we're really close to it being complete, more than likely at least, for a couple reasons. Number one, we're near the extreme of where a wave 4 correction should be. Certainly if gold made a weekly close below 1778.70, that's the closing high, recent swing closing high, that would void any potential bullish potentialities. So we haven't done that. I'm not forecasting it's going to do that. In fact, it's probably not going to do that. But boy, if it does that, then completely forget about a bull trend. But the key factor here is one of the key time factors, and that's the week ending October 9th. What week is that? That's next week. And that should be the maximum time to complete a wave 4 corrective low, which should be a weekly low, and actually it should be a multi-month low, because indeed if it's a corrective wave 4 low following the end of the correction, we should continue the trend to a new extreme above the August high. So that's why we're within days of a trade setup and finding out how important this low is going to be. So it's time to get alert, my friends, time to be alert. This is the daily data, and again, it's right up to date. So I'm not looking at historic examples, those ideal examples from the past. I'm looking at what do we do right now and the days ahead. Well, real important on our dual time frame momentum strategy is that on Friday, the daily momentum made a bear reversal from the overbought zone that usually coincides with a price high and then sideways to down for somewhere around 3 to 5 days. We always look at 3 days at a minimum. Sometimes it goes 5, 6, and 7 days, but typically it's around 3 to 5 days. So more than likely, gold's going to be sideways to down for 3 to 5 days with a potential for a new low. Our pattern suggests the potential for a new low. Again, I don't know if that's going to happen, but I'm going to give you the specific trade setup we look at probably by the end of this coming week that we're going to be able to probably at least identify a setup for a long trade with very minimal capital exposure, again with the potential for a multi-week low, and that could potentially again continue to advance to above the August high. So as I mentioned to subscribers, or I had in our reports the last couple of weeks, if we close above 1934.30, that would have been a bullish confirmation signal. Of course, we didn't do that, and we made the bear reversal in the daily momentum. So sideways to down for a few days. What happens the next time we make a DT oscillator, our momentum bull reversal? And if you don't have the dynamic trading program, you have another program, and you have some momentum study that's reliable for you to identify swing lows and highs, then use that, whatever. They're all the same. For goodness sakes, every momentum, every oscillator, they're all just crunching the open high low close with certain look back periods. So we think the DT oscillator is really, really good, better than most, maybe better than any of them, but I can tell you stochastic RSI, pretty similar. So what happens when we make the next daily momentum a bull reversal, like we did back here, like we did here, and we did here, and we did here? Here's the key. Here's why it's important. In that now that we've made a weekly momentum bull reversal, anytime we're in a price zone and a time zone for a reversal, and we make the lower time frame daily momentum bull reversal, we have a dual time frame momentum bull reversal. That's number one. That's powerful in itself for at least a short-term low, but because of the price position and the time position, the next daily momentum bull reversal will be a setup for a long trade to potentially complete this wave 4 low. And that may be made above the past low, the recent low. If it is, that's very bullish, very bullish. If we do make a new low before then, it's a potential that will be the wave 5 of C low. See, I have a question mark here. Again, we only look at wave counts once they're confirmed. Until they're confirmed, it's a potential wave count that helps us to identify what the market should be doing in the next few bars or so. So this is really important because we're near the extreme. I love when markets are near the extreme. That's when we have a real good trade setup with minimal capital exposure. So when we make this daily momentum bull reversal, and since we just made the bear reversal on Friday and we're 3 to 5 days, the earliest this probably would be made would be Wednesday, could go into Friday, even the following week. But what a setup this is going to be. So those are the conditions that you look for. guess what? Of course, in silver and the GDX, it's almost exactly the same here. Silver, by the way, take a quick look at it. That has a better potential for actually making a new low because it's been relatively weaker. And here we had on Wednesday this outside bear reversal day, and then on Thursday this was an inside day, and I don't think this is quite a double inside day, but another narrow range day as we're rounding the top. We're heading down, potentially to 2107, 2012. But whether we make a new low or not, the next cycle and bull reversal in the daily momentum is a setup with minimal capital exposure. On the long side, you can use futures, you could use options. I'm not really an option trader, so you decide what kind of option strategy would be good. And of course, there's ETFs and there's mining stocks. A lot of opportunities. Let me tell you, is the S&P and the stock indexes are in a very similar dual time frame momentum setup coming up in the end of this coming week. And there's very specific parameters, whether it's going to be a go long setup or it's going to avoid that. But we use the dual time frame momentum setups frequently once we get near extremes and when our other technical analysis indicates that we're at or near a reversal. So stock indexes, take a look at the euro, very similar. Take a look at crude, very similar setup. So if you want to know more about these setups and get some more details, check out our DT reports, $19 for 1 month. We also do big picture reports. We look at the long-term trends in these markets based on the same type of analysis we do in intraday data and daily data, weekly data, but we look at monthly data and we look at larger time frame patterns and what confirms or invalidates trends and reversals, that sort of thing. Thanks for checking us out. Take care. Have a fantastic week and stay safe.